Okay, let's get started. Welcome everybody to the ClockOn webinar for STP Phase 2. Please be advised that this session is being recorded for your convenience and that a link to the recording will be provided via email a short time after the session is completed. If you have any further questions or queries, please contact our support team at support@clockon.com.au. All right, so topics covered in this session, we're going to be covering what is STP, just briefly, and what are the changes with STP Phase 2, and what changes that are required within ClockOn for the STP Phase 2 compliance. Right, so what is STP? Yep, introduced in 2018, STP has been progressively rolled out as a requirement for all Australian businesses. It was to replace the old EMP-DUPE file upload system where you had to upload a file and then issue out group certificates to all your employees. So no longer needed. It allows for the collection and assessment of information throughout the financial year rather than just at the end for the ATO's purpose. And it also allows the employees to view their information directly from their MyGov portals. Right, so what has changed with STP Phase 2? In a nutshell, they've increased the amount of information that you're required to send to them. So that has a couple of benefits. One is they're able to connect with their own internal systems and share the information across them. So things like Medicare, workers' compensation, things like that now have a direct link into the STP system. Centrelink's another one. They've also, as I said, increased the level of information you need to report with each submission. And they've also introduced STP allowance categories. Now, the majority of these features that are shown in this webinar have been in place since Build 321, which was released on the 27th of the 4th, 2021, so prior to this financial year. So the vast majority of the STP Phase 2 functionality has been in the system. And things like the recording of overtime amounts that the employees need to submit now, and leave taken and leave payouts, things, that sort of stuff should already be recorded in the system. Now, the STP Phase 2 functionality in itself to actually submit through to the ATO has been in the system since Build 333, which was released on the 19th of the 2nd, 2022. So don't panic if you haven't made the necessary changes as per this webinar or the documentation provided before, as the ATO will allow you to update that information directly through the STP system, either by the next submission for the employees or by the employee update. So the first thing we need to cover is what changes have been made to employee onboarding. So to view the fields for the employee onboarding, you need to open up the Employee Details Pay tab, as we're just currently showing here. So select the employee, click Edit, and then select the Pay tab. Right, so the first field we want to discuss in that Pay tab in regards to STP Phase 2 is a new one called Income Type. So this is to indicate what type of employment that you're actually putting the employee under. So it's not like salary or hourly or anything like that. It's more, what are they actually doing? So we've got a couple of different categories here. So we've got closely held employees, we've got foreign employment, labour hire, salary and wages, voluntary agreement, which is contractors, and working holiday maker, which is people on visas. So the most common one that you'll use in this is salary and wages, as that's a standard employee in the system. Labour hire is more for, it's kind of like contractor, except it's for short-term work. So fruit pickers might be an example of labour hire, or short-term quick help. And we'll cover off the other ones in a sec. So let's just go to the next slide, or next bit. So there's another field in here for include in STP. So that's only disabled. That'll be included for everyone else, but it's disabled by default for contractors, which is again, voluntary agreement. So if you need to turn on a contractor to submit to STP, you'll need to manually remember to tick on that option. And we've got another field in here for country, which is for use with the foreign employment and the working holiday makers. We'll discuss that in a sec. First of all, let's go into closely held employees in a little bit more detail. So the closely held employee is an employee that has a direct stake in the business, say directors or direct family members working for the business. Originally with STP, you didn't have to submit closely held employees if you had less than 19 employees within the business. This, according to the ATO's documentation, expired on the 30th of June 2021. If you weren't submitting these employees before, you likely have to now. But if you're unsure, please contact the ATO for advice. There's also other items in regards to closely held employees in regards to the reporting frequency. They might be the only ones that we know of that are allowed to submit quarterly. Well, not 100% sure on that, but yeah, check with the ATO if you want further advice on that. Right, so the next ones we need to discuss are foreign employment and working holiday maker. So a foreign employment employee is an Australian resident who is working for your company, but they're overseas. So for this instance, the country field needs to be indicated as the country in which the employee is working in. Conversely, working holiday maker is the other way around. It's employees from another country who are on visas working within your business. In that case, you need to put the country as where they're from. Next, we'll go into contractors, so voluntary agreement employees. So you need to check with the ATO as to your requirement for contractors and STP submissions. For the vast majority of the ones we've come across so far, STP is not required for contractors, hence why the option is off by default. But there may be some circumstances where it's needed. If it is required, again, just tick on, ensure you've got the tick to include the include in STP option on, and you also need to provide an ABN for these employees. Additionally, if they're required to report a commissioner installment rate, then you need to make sure you've got the following two things indicated. One, that you've got the tax category for the employee set to ATO defined, and two, that you've got the tax rate set to 20%. If you don't have the tax rate set to 20%, it won't go under a commissioner installment rate, but the employee will still be taxed at the rate that you indicate here. The next employee onboarding setting is the Medicare settings. So there's a couple of little drop downs in here. So we've got Medicare reduction. We'll start with that. So in here, you can specify whether or not the employee is spouse only, no Medicare reduction, or whether or not they have dependents. So if you choose dependents, you'll get another option in here where you can indicate how many dependents the employee has. Next, you've got a Medicare surcharge option, which you can indicate the tier if there's a Medicare surcharge that needs to be applied for the employee. Now, just be aware this is purely for onboarding purposes for the employee. It doesn't affect payroll in any way, shape, or form. It would be up to between you and your staff whether or not that information is required from the employee. Again, any further advice on that would need to be provided by the ATO. Now, this is an important option. There's been changes to the way that the tax category is used with STP Phase 2. It is now a mandatory requirement. With STP Phase 1, all they cared about pretty much was the gross and the tax. STP Phase 2, they want more information. So we've got to send that through now. So what we've done in ClockOn is if you've set no tax as the tax category, if you're calculating tax yourself, you can still do that. But when it goes through to STP, it will be considered as the default tax-3 threshold claimed option when submitting through STP. For this reason, ClockOn strongly recommends that you be careful with what you pick with the tax category, and we recommend that you use the tax calculations from our system. Right, so the next is we've gone past the employee onboarding, and this is just a little bit of a location onboarding option, which is brand new, called Working Holiday Maker Registration. So companies that employ both visa-based staff will need to indicate what their Working Holiday Maker registration status is, and you need to register through the ATO. So to find that, what we need to do is just open up the location manager, open up the location, and then select the other tab. And there we have the drop down there. So you just indicate whether or not you're registered or not. Right, so we'll move into the next step, which is additional payroll reporting. So again, there's an increased level of detail that needs to be submitted within each STP submission, and the detail is updated against the employee's year-to-date record on a per payroll basis. The ATO has introduced STP allowance types, so they can get a better breakdown of what's making up the employee's gross wage. The year-to-date detail, as with previous versions of ClockOn, can be accessed through the year-to-date button in the employee's pay screen. Just take note that that's now moved. It used to be down further on the page. It's been brought in line with the rest of the drop-down. So if you can't find it, just look a little bit higher. So here we've got the first tab. So you'll notice that there's further breakdowns for the salary sacrifice amounts, salary sacrifice superannuation. OTE was there since STP Phase 1. RSEC is now there, or was there, but is now separated out, and the total RSEC amount. The additional tab has been added for specifically for STP Phase 2. It now gives you an indication of the overtime, the child support garnishee and the child support deduction. We'll go into the difference of those in a sec. Cashed out leave, workers' compensation, paid parental leave, other paid leave, exempt foreign income, and foreign tax paid. And the third tab is the STP allowances that have been processed through the system. So in this case, I've just got director's fees of $1,000 in here, and it was processed through as a before tax allowance. We've also got a type for director's fees. If we were to click that drop down there, we would have other options, say for cents per kilometre, laundry allowance, things like that. Generally, you don't need to make changes to the year-to-date screens directly, with a few exceptions. It's better to process what you're doing through Payroll and let Payroll update the year-to-date screen. The reason being is that if you were to go to look at the reports in ClockOn after making manual changes to the year-to-dates, the reports will not reflect your manual changes. Now, just going over some of those options that we saw in the previous slide, the ATO will now be collecting specific information in regards to the following items. The amounts for child support paid, the amounts for paid parental leave paid to the employee, amounts for workers' compensation, any overtime costs for the employee in a dollar figure, not in an hourly figure, the cost for any leave that's been taken or paid out for employees, any exempt foreign income amounts, and any foreign tax paid. First of all, we'll just start with child support. Right, so child support in ClockOn is paid through the system as an allowance. It's either paid through as a garnishee amount or a deduction amount. The difference between those is garnishee is a court ordered amount, deduction is a volunteer amount. And the payments will act as a pay disbursement in ClockOn. So it'll be a portion of your net wage going to a different account. And this is a basic setup of a child support garnishee option. So in this instance, the type is set to child support garnishee. It defaults to pay disbursement. You can indicate an amount per period if you want, or per week, or per fortnight, and then you enter in the payment details for the disbursement. Next, we have paid parental leave and workers' compensation. So both are actually recorded through timesheets in the system. So if you have an employee on paid parental leave, you would need to set the type in the drop down for the timesheet to leave. And generally you'd want to put a note in there, but you'd also pick the category as paid parental leave or workers' compensation, depending on what the category is, obviously. Next, we have overtime. So overtime is only generated through the rule settings. It's important to note that with STP2, overtime is recorded. It cannot be configured through an allowance in the system at this time, and special rates as well. You cannot special rate an amount into an overtime and have it go through the year-to-date screen. It needs to be configured correctly through the rule sets in order to follow through to the year-to-date screen. If you need any help with the overtime setup, by the way, let our support team know, and I'm sure we can work something out with your settings and help you process that. Leave taken. So leave taken indicates any leave amount outside of workers' comp and paid parental leave, so such as annual leave, long service leave, rostered day off, or personal leave, things like that. They get allocated into the leave taken bucket. So again, it's leave timesheets, it's not payouts there. Leave cashed out is the payouts, excluding termination payments. Termination payments come into a different category again. It's also important to note that if you cash out time in lieu payments, it will be considered as overtime instead. So those amounts will go to the overtime bracket rather than the cashed out leave section. Right, so now we move on to the exempt foreign income and foreign tax paid fields. So again, exempt foreign income amounts are earnings that the employee made to the employee whilst they're outside the country that meet the specific requirements as set by the ATO. If you're not sure what those requirements are, you might need to contact the ATO or view their documentation. Foreign tax paid is the tax already paid within another country. And both of these amounts will not calculate within ClockOn automatically. Unfortunately, we're not able to cater for which payments are which when the employee is outside of the country. So they'll need to be manually added into the year-to-date screen. And again, just view the ATO's documentation if you're not sure as the requirements for these items. STP allowances. Okay, so STP allowances show separately on STP reporting. They can either be before or after tax amounts, depending on the requirement. I noticed that there is some conditions where cents per kilometre, for example, up to a certain amount can be considered after tax, and then after that before tax. So you need to check the ATO's documentation as to the settings for some of these fields. But yeah, so to set up an STP allowance, you simply change the PAYG location drop-down from gross wages and salary to allowances. And then you'll see an additional pop-up come up here, the STP type, and you can click that drop-down to select the type of allowance. Again, you only need to do that for the allowance types that the ATO specifically specifies. A lot of allowances are still considered gross wages and salary, so this isn't needed. Back pay is one. So a back pay allowance, you wouldn't need to set the PAYG location to allowance. You'd leave that as gross wages and salary and just process it through. Right, STP reporting. As per STP Phase 1, we provide employee reporting on a per submission basis, and the new values for STP 2 have been added into these reports. We'll go over an example of an STP report in a sec. So the amounts that are submitted are the accumulated amounts for the employee for the financial year. So if you were looking at it, expect that it's got the entirety of it. It should pretty much relate mostly back to the year-to-date screen. When reviewing the reports, please note that the gross amount that's shown on the report is not indicative of the total gross amount that you would see, say, on a payroll summary. They split it out, and I'll show you in a sec as to how that can work. So they want base gross and with certain allowances into it, and then they want everything else split out. Right, so here's an example of an employee that's been submitted. For this particular example, I've only included one payroll in the financial year just so I can show you the breakdown of it a little bit. So we've got an STP employee summary here, and we've got a payroll summary compact report. So in the payroll that I generated, I had the employee with a $2,000 worked hours amount, so the gross wage section on the top of the payroll. I added a back pay allowance of $250. I did a $1,000 statutory annual leave cash out, so a payout, and I also added $1,000 in director's fees as a STP allowance. So if we have a look at these reports, you can see that the amount of gross wage on the STP summary is $2,250. That's the combination of the worked hours and the back pay amount. Next, we have the ordinary time earnings, which is what super is calculated on. So in this case, it would be the gross wage and the director's fees, as the director's fees in this case is taxable. Oh, yeah, it would be included in the super earnings base, so OTA. Next, we have a child support garnishee, which again is just a pay disbursement, so it doesn't come into anything in regards to these reports. So that's just a note of how the amounts will display on this report. And then we've got the cashed out leave of $1,000 there. So comparing that to the payroll summary report, we can see down here that we've got the gross wage of $2,000 here, which relates directly to the worked hours. So you can see the first discrepancy straight away there. So we've got the gross wage on the STP report, inclusive of the back pay allowance. Yet on the payroll summary, this is purely worked hours. If we have a look at the gross adjustments, this includes any amounts that the employee has had as part of an allowance. So it would include, in this instance, the back pay amount, the director's fees, as well as the cashed out leave. And that gives us the total gross of the $4,250 there. So straight up there, you can see that there's a discrepancy in regards to how these reports work, but you actually do get the final figure. So 2,250 plus 1,000 plus 1,000 will give you the total gross there. Yep, and then you've got items which are much easier to read in regards to tax. You should have a total tax and super. Super might also be split out as well because you've got salary sacrifice amounts as well. So that one might need to be added up as well. All right, that's all we've got at the moment. So thank you for your time. Again, if you have any further questions or queries, please contact our support team at support@clockon.com.au and we'll be more than happy to help. All right, thank you for your time.